Hello and welcome to today's video. I'm going to be doing a Bitcoin analysis, high time frame, low time frame, just kind of going through a few things, especially some things that I'm seeing that could be important for you guys. So first thing that we're seeing is how important this 10.5K level is. Now, this 10.5K level is also a really important Fibonacci level. If we take our swing high from the 14,000 level and then we take our swing low, we can see that this level is actually right at our 61.8. And I like to use 61.8 in the 65 fib, just because that's usually a really good level to short or long, depending on which area of the structure. So we can see that this level is really clean, really clear as far as the 61.8. We've tested it 1, 2, 3 times. So the more times that a level is tested, the more likely it is to break through. And that's just a facet of supply and demand. So this is a strong supply zone. So every time it gets to 10,000, we see nice market sells, market sells, market sells. And that usually means that somebody is just selling a hefty amount of Bitcoin in that level. But eventually, with macroeconomics, trend, all kinds of different things, we'll see this. Eventually, supply will run out and demand will overtake. Now, we've got a few things that are creating bullish momentum with Bitcoin. We've got the Fed printing out trillions of dollars, which is making the dollar weak, which is causing assets to rise against it. So we're seeing gold move it up. We're seeing stocks move up. We're seeing real estate move up. And we're seeing Bitcoin move up. Bitcoin went from 3,800 all the way up to 10,000. This Bitcoin drop correlated with the stock market as well. But it actually had a bit of an overthrow due to the BitMEX liquidation engine. And it pushed it down a little bit further than anybody anticipated. Now, what's interesting about this level is it actually correlates really well with the previous resistance from here. So this kind of looks like just a breakout retest of this resistance over here. And it came right down to this bullish engulfing base. And in price action structure Forex, that's a really common strategy to be able to pull that base. Now, the other interesting thing about this entire structure, now what I'm going to do is I'm going to get rid of everything. What's really interesting about this structure is we do have a couple of trend lines that are worth noting. So we've got this trend line here, a little bit of an overthrow. I'm using Bitstamp. If we use BitMEX, it'll look very similar with a little bit of an overthrow as well. But this trend line is really interesting because it kind of looks a lot like this trend line back here. And what we saw was let me zoom out to the 3-day here so it's a little bit easier to see on the screen. What we saw is we saw lower high, lower high, lower high. Same thing here, right? Lower low, lower low, lower low. Now in this case, it comes up and this is often used where you see shorts fill, shorts fill, shorts fill, and then eventually shorts take profit. Boom, okay? So we eventually see that breakdown. So something really similar. We had this floor, short fill, short fill, short fill. Now we've got a little bit of the opposite going on over here. So if you think about it a little bit reversed. So we've got longs fill, okay? Longs fill. Maybe they took profit up here. And maybe they took profit up here, right? Long fill, short fill, short fill, short fill. But if you have a really big position size, like let's say $100 million, $200 million, it takes a couple drives and you have to use sentiment and you have to use retail traders in order to fill really, really big bags. And you can't really do that OTC, especially if you're trying to take a really massive position like some of the Bitfinex whales and some of those guys. So they'll often use sentiment. They'll use some tricks. They'll often market sell on spot exchanges to create liquidation cascades. But so if you think about it a little bit opposite, so here you got short fills and you see this nice breakthrough where you get this really nasty 50% drop, massive profit on any shorts that filled here, any shorts that filled up there on that big capitulation wick. Now, same concept over here, longs fill, longs fill, longs fill, and you've got this kind of floor. If I even flip it upside down, kind of looks the same. You've got that same floor, boom, 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 and we got that nice drop here, right? Same kind of concept. You got that capitulation, boom, 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 higher, low, higher, low, higher, low, break. Here you've got same concept, floor, floor, floor. So if we come back and test this, obviously you want to long that, be double bottom. Looks solid. The thing is, we've got a couple patterns going on that are worth knowing. If we go into the 4 hour, I want to show you this really clear and obvious. Actually, let's use the 12 hour, a little bit easier to see here. If we take this line here and we just go to the top there, like that. So this is an internal trend line, okay? So we tapped it once, tapped it twice, tapped it 3 times around here, broke through, tested as support, tested as support, tested as support. So right now what we've got forming here is a bit of an ascending triangle. So this can come back down, test this zone. If it breaks through here, this is a really good short opportunity for much further down, because we're going to lose a lot of support in that area. I wouldn't be looking for any sort of a long if we break this internal trend line here. But what I'm seeing mostly is a lot of chop. Okay, this range here is really, I mean, if you exclude the wicks, it's about a 13% range, and it's been in this range for quite some time, about since this zone here. So since April 29th. So it's been in a choppy consolidation range with a little bit of overthrow for about 48 days. That's a pretty long time for Bitcoin. Usually it doesn't consolidate that long. So whichever move, whichever direction this thing is going to go is going to be pretty big. So one thing we can use to kind of help us out is the funding indicator by neobutane. If you look here, neobutane 5,300 likes, throw that up. I've talked about this before, and we'll go through a couple of other things where we can kind of look short-term time frame. But so essentially, we'll look for a couple things. So it may come up here to this 9,800 level and then get rejected on a short zone, which would also be the base of this bearish engulfing. So we know that there's a lot of supply there. A lot of supply in this zone because of the way that it dumped here. So we know that there's a lot of supply in that area. It's also lines up with resistance. This was a kind of a bit of a fluke here. A lot of overthrow, but look at the funding. The funding kind of tells its own story here. So the funding, and you guys have seen me talk about this before, whenever we get like massive positive spikes, that usually creates this BART formation. But whenever we get prolonged negative funding, it usually creates a pretty significant short squeeze to the upside. And we got that. We got a 27% short squeeze to the upside from 7,800 all the way up to 10,000. Now, basically, we haven't had a really strong indication either way. We got some nice some nice negative funding here, but this indicator is becoming a little bit less relevant than it used to, but it's still something that you want to monitor. So right now what we see prices moving up, but on negative funding. So we just hit our supply zone on short-term time frame. I'm going to zoom in here. Okay. So we just hit our supply zone on short-term time frame. We got a little bit of a supply nuke into here. So we could see a bit of a retest down into this lower level, 9,100 or lower. And that's to be expected, especially in this range. Chop. I was looking for a little bit more 97, 9,800 to get short. So if it nukes here, I'm not in any position right now. I'm mostly flat, sitting in USDT. I was in a long position back here, but I got wicked out on a stop loss. So I'm kind of just watching from the sidelines here. Really choppy market, just kind of poor conditions for the moment, and the liquidity has been pretty bad. Now let me go into that a little bit more. So one thing I'm looking for is when we look at BitMEX, I want to show you guys just kind of how bad the liquidity's actually gotten. So this is a daily chart. Well, let me look at the 4 hour though. The 4 hour tells a little bit more of a story. So the BitMEX market makers were incredibly active for basically all the way back. 2018, we got that massive pump, but very, very active. These gold pockets are activity on the from BitMEX. So you can see they, very, very strong reacted. And if we zoom in, you can actually see, basically this is chocked full, 7 million, 10 million, 6 million, 6 million. And then same thing on the upside, 11, 6, 6, 6. So very, very active market making activity on BitMEX. Okay. But what happened was a fundamental shift on this market making activity. A significant number of BitMEX market makers, and you can see how active these guys were. I mean, 8 million, 13 million, 10 million. So, very, very strong, very active market makers. It used to be a very competitive edge. But then this happened. This nuke from 8,000 all the way down to 3,600. This fundamentally changed the Bitcoin market dynamics very, very significantly. BitMEX market share lost a lot of dominance here when this happened. And you can just see what happened. Look at the market making activity before the drop and look at the market making activity after the drop. The market making activity significantly slowed down. So now when you zoom in, you can see it's barely over $1 million. And what you're also seeing is you're seeing the BitMEX market get controlled and you're seeing a little bit come back, but nothing like what it was. So what's interesting about that is you can see the market much more controlled with small pockets like this, 4, 6, 5. So this is a pretty bullish block. You don't see blocks like that on BitMEX. So they're trying to protect their bids here, and they're possibly trying to fill on BitMEX here before a long side up squeeze. But you can see just how thin these books are. Look how deep this wick on BitMEX went. It went all the way down to 8,500. On no other exchange did it go that deep. And that's because the liquidity is so thin on these leverage exchanges like BitMEX. Now it's much, much better on Bitfinex. Bitfinex activity has actually increased pretty significantly. But once this drop happened, it really changed the market dynamics of BitMEX. So that's why the funding indicator is much less relevant than it used to be. So what you have to do is you have to explore to see what is the dominant exchange now. And what you can see is that drop, we actually saw much more activity start coming out of Bitfinex. So the Bitfinex whales, they started to really come in pretty heavy here. And what we can see is on that last drop down to 8,600 or 8,900 here, Bitfinex got very, very heavy here. Pretty significant heavy filling. That's big for Bitfinex. So now what we got to do is we got to look to see what their targets might be. So up here, 10,200. That's a wall just above this liquidity. That could be a target. This target right here, 96, 9,500. That could be a target, but we're not seeing enough to really substantiate how much filling happened down here. So most likely, they're not going to let their hand be known until we see this run a bit higher. And they may even come down and fill this a little bit more. Maybe all the way down to 8,600, which would still be an okay move for Bitcoin, but just something to keep in mind. Now, OKX has also been really active, and what we can see is they also filled on that move down as well. Not as much as Bitfinex, but they filled all along this whole entire move, and they've got a lot of TP targets up here around 10,000. And then Binance, which has also been very active, they got very, very heavy, fill. And this is spot, so they don't really give a shit about funding. And sometimes they'll use spot markets to fill bids on leverage exchanges. But Binance was actually the reason why we couldn't break this 9,600 zone. So a lot of exchanges are currently bidding 9,350. So that's an area to watch. You can see BitMEX, which we already covered. They're bidding that 9,350 zone, 9,300 all the way to 9,350. And then Binance, Bitstamp, and even I think Coinbase was bidding that 9,350 zone last time I checked. Yep. So they're also bidding that 9,300, 9,350 zone. So that could be a decent area to scalp long. Base of the bullish engulfing that broke our supply zone, which is usually a pretty high quality. If we zoom into the 15-minute, which is usually a pretty high potent strategy. So we're at 94.35. This would be the that 93.50 level, which would be the base of that breakout, which would be the liquidity just under here. So it would kind of grab those stops. Now, one thing to also keep in mind is where is the liquidity at? So one thing we can see is that this is a XBT liquidation level chart. So what we can see is that the long liquidation or the short liquidations are up here right around 96.79, just under 9,700. And those are the 25x shorts. The 50x shorts are right here, which were liquidated on this move up here. But this orange part, this red part here, these are 50x longs, okay? And then this this pink part down here, these are 25x longs. So our long liquidity is right here at 93.56. So that's that 93.50 level. So we could see a wick down to here. Not sure if they've got the firepower to hit this 91.75 level, but we could see a quick wick down here, which would give us a little bit of an inverse head and shoulders. Could see a wick down here, and then we could come back and chase that 9,700 level for the breakout. So that's what I'm looking at. That 93.50 level could see a little bit of a dip, kind of, you know, something like that. Where we take out that liquidity on that 93.50 zone, tap that 9,300, and then we push up for the top level of this descending resistance here, this descending trend line. So just some things to keep in mind, some things to look out for, a few new tools to add to your toolkit. But let me know how what you guys think, how your trading's been going. And if you want me to keep doing videos like this where I kind of go over high time frame, low time frame, but just something to watch out for. Now, the other thing that I wanted to go over real quick before I get off is my bias is bullish above 10.5K. Okay, my bearish bias is below 8,900. So below this internal trend line here and above the supply zone here. So right now, this is mostly, in my mind, just chop before we pick a decisive breakout zone. So don't get caught up in the chop too much. Try and preserve your capital. If you are going to play the chop, try and play the extreme ranges, or just scalp them. And try and keep your position size on the lower side, just because the liquidity is so poor. I know that $900,000 million positions are getting slipped pretty hard on really any exchange. So make sure that you're just protecting your capital in this choppy range. And again, everybody looks like a genius in a bull market. So sometimes it's better to just wait and look like a genius, because it's a much easier trading environment than it is to get chopped up in an area like this. I know my trading, I've been chopped up, lots of stop loss hunting, lots of stops going on. And so I've been lowering my position size, lowering my just overall exposure during this choppy range until I get a much better environment, trend environment, or less stop hunting, less where they kind of come down and fill their wicks in this market environment. So anyway, let me know what you guys think on this high time frame, low time frame analysis, and I will see you guys soon.